Good afternoon, everyone, and welcome to our Professional Services Vendor Performance Benchmark Review and Outlook webcast, highlighting the results from our recent Professional IT Services Benchmark. My name is Allison Crawford, and I will be your host for today's session. Over the past few quarters, we've engaged with our readers to bring deeper clarity into the state of the professional services market. This quarter, we're going to take a slightly different approach to our webcast and delve into consulting and systems integration and how client demand and vendor response are evolving. Before I pass this over to Elitsa, Ramunas, and Stephanie, there are a few logistics I'd like to cover. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your thoughts and opinions on the materials we're presenting. Please send any questions or comments to the Q&A or chat function to the right of your screen. Elitsa, Ramunas, and Stephanie will address them at the end of the presentation. Or, if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to the analyst at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Now, let me introduce Analyst Elitsa Bakalova, Analyst Stephanie Artigliere, and Senior Analyst Ramunas Svarcas from the Professional Services team here at TBR. Stephanie is the lead Accenture analyst and focuses on management consulting and services benchmarks. Elitsa has been covering Capgemini, Atos, and T-Systems for the past 8 years, as well as the global market delivery landscape and management consulting. Ramunas has been covering the services market for over 15 years and manages many of our custom services engagements. With their inputs, the professional services team has guided countless clients to improve margins and understand new global opportunities to expand their reach. And with that, let me hand this over to Ramunas.
Thank you, Allison. For those new to TBR and the TBR IT Services Benchmark, this is a report encompassing and contrasting 30 vendors involved in the IT services business. These vendors account for over $300 billion in revenue and close to 40% of the market. The companies included in our benchmark are publicly traded companies. For them, we receive financial reports on a quarterly basis, after which we do generate individual reports on each of these companies, and then summarize these reports into this IT services benchmark, providing insights into the winners and losers for the quarter, as well as the reasons why. While initially we were preparing for this overall webinar, we anticipated discussing the applications outsourcing and business process outsourcing markets. However, upon reviewing the numbers for the second quarter and reflection, and recognizing that the consulting and SI markets were not performing very well, we were receiving a lot of questions from vendors such as yourself that are listening in today on what's happening in the marketplace. So we decided to really provide insights into what's going on, where is the consulting and SI market heading, and what do we expect for the future. So with that, let's get started, Elitsa. I turn the presentation over to you and the discussion of the findings.
Thank you, Ramunas. Through its ongoing research of the IT services industry, TBR has discovered that IT service providers are gradually preparing for growth in the consulting and SI segment. While clients remain interested in near-term cost takeout, they are increasingly emphasizing on technology implementations around cloud computing, analytics, and mobility, which we believe in turn will drive growth in consulting and SI. TBR believes consulting and SI is not going away, and we're going to support our position with this presentation focused on the consulting and SI service line. During this presentation, we will cover 3 key topics, including performance, portfolio, and people. Let's start with the first topic, which is performance of the consulting and SI service line. Consulting and SI budgets remain tight, especially across the developed economies. However, key IT service providers are investing in expanding their offerings and resources to support consulting and SI growth. TBR expects pent-up demand to release for consulting and SI services that support emerging technology adoption, thus contributing to overall consulting and SI growth. All IT services are showing decelerating trailing 12-month growth when compared to the growth during the year-ago quarter, as economic conditions continue to plague IT spending. The graph on this slide represents global consulting and SI revenues for the 30 vendors included in the IT services vendor benchmark and shows trailing 12-month year-to-year revenue growth for the 4 service lines analyzed in this report, including consulting and SI, BPO, applications outsourcing, and ITO. The dots on the graph indicate year-to-year growth, and the arrows indicate directional change relative to the year-ago quarter. As consulting and SI are discretionary items, the segment experienced flat growth in 2Q13. This was the slowest trailing 12-month growth and the largest deceleration in the year-to-year growth in 2Q13 when compared to the rest of the service lines, including BPO, AO, and ITO. Vendors continue to face tight IT budgets and pricing pressures across the developed countries in the Americas, EMEA, and Asia Pacific. During 2012, consulting and SI growth trended below the overall IT services revenue growth for the 30 vendors in the IT services vendor benchmark, and 1Q13 and 2Q13 were no exception. Clients sought to reduce costs and support operational efficiency, pushing vendors to invest in ITO, BPO, and AO solutions, which drove growth in the outsourcing service lines. TBR expects a gradual shift in consulting and SI performance in the coming quarters. The consulting and SI industry is nearing an inflection point at which near-term cost takeout will give way to emerging technology implementations. Vendors have been investing in their consulting resources, putting feet on the ground to build client relationships, developing offerings and implementation capabilities around emerging technologies, and spurring interest for clients. Clients, on the other hand, have been shifting from learning about the emerging technologies to understanding how those technologies disrupt business models and, in turn, creating opportunities for consulting and SI vendors. TBR expects this trend in consulting and SI to positively affect growth in the service line and slowly shift the flat year-to-year growth in 2Q13 to a positive, though low single-digit growth in the coming quarters. On slide 8, let's talk about some of the growth leaders in consulting and SI. All India-centric vendors positioned above the average trailing 12-month growth for consulting and SI, as well as total services revenue in 2Q13. Those vendors led in growth, though still from a smaller revenue base when we compare to multinational firms such as Accenture and IBM. India-centric vendors have been recruiting and acquiring firms to increase their onshore consulting presence, have proximity to clients, improve their understanding of the local markets, and support client relationships. The combination of industry-specific onshore and low-cost resources allows such firms to increase their value proposition and better compete for end-to-end transformational projects. The firms that are positioned below the average trailing 12-month growth rates are also taking steps to solidify their consulting and SI capabilities and grow their revenues in the coming quarters. On the next slide, I'm going to focus on Accenture. The firm grew its total services revenue by 2.2% year-to-year, above the 1.8% average trailing 12-month growth for the 30 firms. but Accenture saw a 2.5 year-to-year decline in consulting and SI on a trailing 12-month basis, which is below the flat consulting and SI growth in 2Q13. While consulting and SI revenue declined, it's worth noting that demand for IT transformation projects is generating consulting and SI opportunities for Accenture as clients adopt technologies such as cloud and digital marketing. Accenture's blend of industry, functional, and technology expertise and emphasis on value for the client will help the firm grow in consulting and SI. Accenture recently released calendar 3Q13 revenue, with consulting and SI returning to growth, up by 1.7% year-to-year in 3Q13. Accenture showed positive consulting and SI results in 3Q13, which is a good development for the firm. However, TBR expects the inflection point for Accenture to be drawn out as overall demand for consulting and SI will likely remain unstable into 2014.
I want to also add here that, Accenture's, and the drivers that Accenture are implementing to stay on top of their consulting and systems integration business are not unique to Accenture alone. Virtually all firms recognize the need, to offer functional industry and technology expertise. They're all expanding their consulting staffs to improve this expertise. They're all focusing on emerging markets, both on a geographical basis and an industry vertical basis. And they're trying to provide consulting services, at the lowest cost possible for the clients, since clients are so sensitive right now to cost, with everybody focused on profitability. Some firms, we know from the previous chart, are further along in the process and are seeing some success from a consulting and SI perspective, although many of those firms are starting with very low, small consulting and SI bases. We do know that other firms are catching up very rapidly. The European firms certainly are trying to focus their attention on consulting and SI, recognizing it as an important area and a revenue potential growth driver for their region, especially if all the debt prices and everything finally reconcile themselves and get out of the way so that firms can begin growing again. So, really there is a lot of focus on improving themselves, what they're offering, and really focus on improving their portfolio. Elitsa?
Now let's turn to slide 10 and cover the second topic, which is portfolio developments in consulting and SI. By 2014, clients will be well aware of emerging technologies and will expect such technologies to yield results. This in turn will support expansion of consulting and SI revenues for the IT services firms. Clients' goal is to drive business value from IT projects and vendors have been investing in developing their consulting and implementation portfolios and capabilities to address client interest around emerging technologies. To offset the decelerating consulting and SI growth and secure larger transformation projects, vendors are developing IP-based solutions and industry-specific consulting to support the adoption of cloud, analytics, and mobility. While vendors scale up their capabilities around emerging technologies, clients will appreciate and grow accustomed to what cloud, analytics, and mobility can deliver. Slide 12 shows the inflection point for the consulting and SI industry. Vendors have been investing ahead of demand for consulting and SI services around emerging technologies, gradually pushing towards the inflection point. Such vendors will benefit as clients spend discretionary budgets on large-scale projects that support IT transformation. After the inflection point, the small projects will give way to bundled transformation and technology implementation deals that have high revenue contribution and support long-term revenue growth. While vendors are adding headcount to support consulting and SI delivery, they are ramping up investments in IP-based solutions and delivery tools to decouple headcount expansion from consulting and SI revenue growth. The few vendors that succeed use a combination of an IP portfolio and internal activities that focus on project efficiencies and employee empowerment. To generate revenue from less labor-intensive activities, HCLT uses IP-based solutions and accelerators, such as Upgrade Smart and MRO in a Box for SAP implementations. Cognizant uses IP-based tools and frameworks such as Project Health Diagnostic, Project Management Maturity Model, as well as industry-specific ready-to-deploy performance management solutions. Xerox increases consulting and SI revenue per employee through workforce restructuring in the U.S., coupled with productivity tools and merging consulting with document outsourcing services. TBR expects vendors will also utilize acquisitions to add IP assets and develop delivery tools and frameworks to generate sustainable, nonlinear growth. The last slide, slide 14 from this section, is a vendor example on TCS and lists some of the firm's activities to expand consulting and SI offerings and capabilities. TCS's consulting revenue increased 15.3% year-to-year on a trailing 12-month basis in 2Q13. TBR expects the firm to sustain its growth through a combination of investments in cloud consulting, onshore resources, scalable IP assets, and industry specialization. TCS is investing in service capabilities related to cloud, such as its cloud advisory services. The acquisition of France-based Alti in July 2013 expands the firm's SAP systems integration capabilities and adds 1,200 onshore employees in France, Belgium, and Switzerland. To add business value, TCS invests in onshore consultants across the U.S. and Europe to work with clients on large-scale IT transformation projects. The firm also offers industry-specialized consulting and SI, such as the digital publishing platform for retailers. TCS invests in IP assets aimed at specific verticals such as banking, financial services, and insurance, as well as technology adoption, such as cloud.
As we can just think across the slides we covered, I mean, there's a number of different ways to address the future need for consulting and SI. Certainly some firms are reorganizing themselves. Other firms are acquiring people, processes, and tools. Some firms are also developing within their own organization tools and IP. In general, the reorganizations and the headcount game certainly continues. Consulting and systems integration is still very headcount sensitive, and to deliver those services, you need an onshore presence. You need to work with your clients. Or one of the things that we think is really coming to the surface right now for all the firms involved in consulting SI is the development of tools and processes in IP, especially patented IP, which creates market niches for the vendors. While at the present time, consulting and systems integration engagements are small, and that's the rule rather than the exception, success begets additional work, and larger engagements are going to be forthcoming. If clients are happy with the outcomes, the question is whether or not they should switch vendors is really mute, because the vendor has already shown that they can successfully help you during consulting work, make improvements in your organization, improve the way you're leveraging and using IT. And a newcomer vendor really can't displace very quickly the incumbent vendor, because most newcomers need to provide some kind of additional cost savings, anywhere in the range of 20 to 30%. If you're leveraging and using patented IP, you have to develop something new to provide the client, and that's not likely to happen in a very quick fashion. Subsequently, the various consulting and SI vendors that are developing IP, integrating it into their processes, creating this niche outcome, are really creating a very strong stickiness with their clients, and the clients are not likely to change in the future, and they're subsequently guaranteeing revenue streams for the future. So customers that are happy with an incumbent vendor are not likely to change, and although the engagements right now are slow and far between, we expect those that have successfully implemented automation, change, and IP will be the ones succeeding in the future. Elitsa, let's head out to the people.
Thank you, Ramunas. On slide 15 begins the third topic, which is related to people in consulting and SI. Consulting is shifting from fly-in with advice to invest, build, and share risk and rewards with clients at a local and regional level. IT service providers continue to hire in consulting and SI. Consulting and SI headcount growth outpaced revenue growth for the service line in 2Q13. This leads us to believe that vendors will have the necessary resources to compete for deals and drive growth and profit after the consulting and SI inflection point. The three key takeaways on the people topic are, first, to wrap services around technology offerings, software and hardware vendors are building global consulting and SI practices and at the same time are opening local offices in emerging regions. Second, global and local market expansion of IT service providers is supported by technology and industry-specific centers of excellence and innovation centers. And third, India-centric vendors use hiring and acquisitions to build their onshore consulting and SI presence. On slide 17, we compare the trending of consulting and SI headcount and revenue growth for a select group of 14 IT service providers included in the IT services vendor benchmark. The 14 vendors are also covered in TBR's Global Delivery Market Landscape, which will publish at the end of October. During the past 4 quarters, consulting and SI headcount growth decelerated for the 14 IT service providers. However, headcount continues to outpace revenue growth for the service line. Vendors increase consulting headcount in low-cost locations to expand their addressable market, deliver quicker and to scale, and increase pricing flexibility. The headcount growth trend leads us to believe that vendors are anticipating rebounding demand, thus building their benches to address future client needs. On slide 18, is also focused on the 14 vendors analyzed in the previous slide. In the table, we show trends for headcount, attrition, utilization, and operating margin. We have the vendors grouped into 3 categories. The first category is SI with support and maintenance that have hardware and software offerings such as IBM and Dell. The second is the pure play SIs that do not offer products, such as Accenture, Atos, Capgemini. And the third group is the India-centric vendors that have the majority of their revenue, of their resources located in India, including Infosys, Wipro, TCS. I want to direct your attention to the onshore headcount section of the table. The 2 groups of SI vendors are focused on improving their cost structures and pricing flexibility. 8 out of the 9, with the exception of Accenture, decreased their onshore headcount year to year, and at the same time, all 9 of them increased their low-cost staff. The trend is different for the India-centric vendors. The India-centric firms want to improve their lagging proximity to clients, better compete for consulting-led deals, and overcome visa challenges in the US and Europe. All 5 of the vendors increased their onshore staff, especially in consulting and SI, in addition to growing their low-cost and total headcount. The onshore recruits will help India-centric firms improve their position when they compete with the SI groups for strategic IT transformation deals. On slide 19, let's take a closer look at the consulting and SI headcount trends for the India-centric vendors. The pace of onshore headcount growth for the 5 India-centric firms depicted on this graph in the blue line has historically been higher and remained higher in 2Q13 when compared to the 9 systems integrators that are shown in the red line. The key emphasis for the India-centric vendors is to narrow the onshore headcount gap with the SI vendors. This will allow India-centric firms to expand their market, in especially local consulting market basis, and increase their proximity in the US and Europe. On slide 20, we show onshore consulting and SI headcount trends for the 5 India-centric vendors. All 5 firms increased onshore consulting and SI headcount in 2Q13. However, Infosys was the firm with the highest onshore consulting and SI headcount growth. The firm wants to compete for deals with Fortune 500 and Global 2000 clients, and to do so, it invests in local consulting resources and delivery centers in the U.S. and Europe. Infosys consulting and SI revenue growth of 14.2% year-to-year on a trailing 12-month basis continues to stem from inorganic revenues and an extended footprint in Europe due to the integration of Lodestone. Moving on to slide 21. In conclusion, consulting and SI is not going away. It is moving in a direction that increases value for the client. In 2012, vendors investing in building service capabilities around technology trends such as cloud, digital, mobility, and analytics. In 2013, vendors continue to bring scale to their offerings, and they are doing so because they expect better times for the consulting and SI industry. Clients now know about emerging technologies, but they need to understand exactly how these technologies disrupt their business models. The key is to create business value for the clients, and vendors will leverage their consulting and SI capabilities to convert technologies and analytics outputs into client business value. With this, I conclude the analysis of the consulting and SI service line covered in TBR's 2Q13 IT Services Vendor Benchmark. Now I'll turn it over to Ramunas Svarcas to go over the key topics TBR will cover in its 3Q13 research, and it will conclude the presentation. Ramunas?
Before we switch off of this slide, I think it's interesting to point out that, as we've gone through the presentation, everybody's building their consulting and, SI capabilities because they anticipate the demand will return. We believe, and from other studies that we've been conducting here at TBR, there is a lot of pent-up demand. Certainly, as Elitsa had already highlighted, cloud is in the cloud delivery model is creating a lot of interest and demand, yet customers are a little bit hesitant to jump in right now because they're not sure what to do, how to do it. There are so many cloud services available. Consulting and SI, and especially consulting, helps them determine, and through the advice they receive from their consultants, what they should be really doing in the marketplace. Mobility is expanding very rapidly, and now you not only have mobile users within companies, but from an external standpoint, you need to address that whole aspect of the marketplace. Again, consulting comes in, consultants help advise how to handle the new mobile environment. And finally, the utilization of social media, which has created an explosion of information through Twitter, Facebook, a number of different mechanisms, is generating, again, a huge demand for advisory services. How do you leverage all this information? How do we use analytics? Who can offer us analytics? Who can put it together for us so that we can leverage it if we're capturing all this information ourselves? And if we're not capturing it ourselves, what firms can help us capture this for us in the cloud or in our own private environment and leverage and use it? So there's a number of things that are evolving from a technology standpoint that are demanding the need for consulting and then systems integration and implementation. As a consequence, we don't believe that the market is dead or that consulting has completely halted and will never reappear again. Historically, consulting has come in waves in terms of the need for consulting, and after the 2009 recession, there was a big drop-off in consulting, and then it resurged again, and it came at the same time as actually cloud started to surface. And that demand hasn't gone away. There certainly are some external factors that are impacting consulting, but we believe that those are going to disappear. So subsequently, we believe that consulting and SI will definitely grow in the future. On our next slide, we're actually looking at what we're going to be covering in our next series of reports. Certainly, our IT Services Benchmark will be focusing in the next future webinars on the outsourcing aspects of what's happening in the services business. We're really also going to focus on emerging technologies, especially in the retail space, coming upon the Christmas season here. We're going to be looking also at how firms are acquiring IP, certainly an element that we believe has a strong impact on the consulting and SI business. And also we're going to be looking at digital offerings. Again, recognizing we're in a mobile market, digital applied with analytics is definitely an area for future growth. We're going to be examining those in our reports for our companies as well as in the future benchmarks. I wanted to also add that we do have, besides our IT services benchmark, we have a number of additional benchmarks that we produce. Management consulting, healthcare, public sector, as well as the global delivery market landscape that Elitsa made reference to. In total, when you add all the companies, because we also include private companies as well as public companies in these benchmarks, we cover over 70 different companies from an IT services perspective, and they account for literally over 50% or more of the total market. And these are the leading companies, and that's why we focus on them, because they really give an idea of where the market is headed. So with that, I'll open it up for the first question.
Great. We've got a couple questions come through now. If you guys have any questions on what Elitsa and Ramunas just presented, please send them through the chat or Q&A function at this time. The first question we had, guys, was early in the presentation. Elitsa, you were talking about kind of hindrances, what's going on. The question we got was, so you don't think the government shutdown will have much effect on growth? Who wants to take it?
I can certainly take it. That's a big question mark. But as we saw when the whole problem with the government shutdown last year occurred, we didn't see a lot of impact. And in fact, in our public sector benchmark, when we were actually covering the firms that are very focused on the public sector, they did not expect, and they kind of discounted the impact of the shutdown or potential shutdowns and the influences on the overall market. From an IT services perspective, actually, it's almost a good thing, because the new wave of technology that's come out, especially the cloud, and what's capable in terms of virtualization, all these tools that have come out are actually creating opportunities for the government, opportunities where they can actually save money, but create a lot of activity for those firms, the IT services vendor firms, in terms of generating business. So it could dampen possibly the growth or extend it for maybe a quarter or two, but we don't expect it to have a significant impact at the present time.
Okay. It looks like we have two questions that came in from different people that are very similar, so I'm going to ask them both, so both people acknowledge that their questions were asked. The first question was, why is IBM showing below the average growth for C&SI? What is challenging the firm? The second question was, IBM reported positive low single-digit performance in C&SI in 2013 following several quarters of negative weak performance. IBM said it is expecting C&SI to be back on track over the next quarters, to watch tomorrow in IBM's earnings call. Do you have any perspective around what IBM is doing differently to improve C&SI performance?
Elitsa, do you want to handle that one?
Yeah, I can take this question. Certainly, IBM was negatively affected by high discretionary spending, and it's similar to all the vendors in the consulting and SI space. But the firm is taking kind of a focused approach, and it's more of an across IBM approach, and it's a growth strategy for the firm to invest in initiatives, three key initiatives. One is Smarter Planet, the second is cloud computing, and the third is business analytics. And through those initiatives, IBM is seeing traction in consulting and SI, and those initiatives are starting to gradually expand their revenue bases and have a positive effect on the service line. They are building backlog, and they will certainly continue to build and support growth of the consulting and SI service line for the firm. And IBM's emphasis on using consulting as a lead into selling IBM solutions is also playing a good role for IBM in consulting and systems integration?
I think one of the other aspects here is that we know that IBM has, over the last year, been very cost conscious and really conservative and trying to eliminate costs to improve profitability. On the other side, I think that, you know, many of the, like, as we kind of showed, the Indian-based vendors have been building out their consulting capabilities and have been nibbling away at IBM, and IBM was somewhat in a defensive position. I think that's changed now, and then with the cost savings and recognition that, you know, there are certain price points that you do have to meet from a consulting and SI standpoint, as well as an overall IT services delivery standpoint. IBM's returning back to a competitive mode here in the marketplace, and certainly we expect that there will be improvements, especially in the consulting and SI area. Will it occur next quarter? I'm not going to even postulate that one for coming up what the earnings release will be for the next day and a half. But we do expect that it's going to turn around. It invariably has to, because the demand is out there in the marketplace. It's just a question of customers finally letting loose and saying, yes, we will start engaging and purchasing. And the fact that the pipeline is increasing is also a positive impact.
Next question we have is, how are firms building C&SI low-cost headcount? One of the two of you guys want to take it?
Sure.
Oh, Stephanie.
So we're seeing that this varies by firm. Some vendors are developing senior level roles in low-cost regions in underpenetrated markets to help build their local market consulting capabilities as well as support their global delivery capabilities. And one such example is Capgemini. Accenture also has a management consulting team called the Global Capability Network. This team consists of approximately 2,000 employees in 12 locations across countries such as Argentina, China, India, Poland, and Spain. And this network really strengthens Accenture's management consulting team, enabling the firm to deliver expertise and meet regional demand quickly and efficiently.
Anybody else want to weigh in?
Well, just to add, I mean, I think Elitsa kind of highlighted it. I mean, you know, the way to gain people is either you hire laterally, because consulting is, you don't really, if you hire a lot of freshers, it takes a while to scale them up, and the market's moving much too fast for people to be trained. The second method is acquisitions and mergers, certainly bringing people on board through that process. The third is partnering. And Accenture is notorious for that as well. They partner with many of their, you know, and work and consult and leverage their partners. They have a very strong partnership relationship, which then augments the consulting expertise within the organization and therefore enables them to take the lead in a consulting engagement.
Okay. Let's see, what's the next question? Are there specific regions that vendors are targeting and opening new offices in?
Lisa, I'll let you take that one.
I touched on the India vendors that are opening offices and, you know, acquiring headcount and also hiring across the developed economies, largely in Europe and in the US. So that's one of the trends. We see vendors moving in onshore to build their proximity to clients, to be able to develop the relationship and drive in consulting opportunities. Others are moving in the fast-growing regions and economies across Latin America, Middle East, and Africa. And they're looking to target industries that drive growth for the firms. And one of those industries is energy and utilities, natural resources. Retail is another example, and financial services. So vendors are moving across the globe. Some of them are moving onshore, others in emerging fast growth markets. Depending on their, and it's on a vendor by vendor case, depending on their reach, and they're doing that to expand their addressable market and to augment their delivery capabilities.
I think one of the key things behind all that is that especially the India-centric vendors, who are the ones that are really trying to expand onshore, while they may not be actually building delivery centers initially, they are opening up offices in all kinds of locations, simply to start exposing the various European customers to the fact that they have capabilities, they have nearshore capabilities that can support their business, and the traditional path for many of the Indian vendors is to start with one client in one area, open up a center there or a delivery center, and then expand it and leverage it to support additional clients. So that's kind of the trend we believe is happening in the European market especially. And will continue to be ongoing for them to better penetrate the European market. Most of the India-centric vendors have historically been very strong in the U.S., so they're really trying to broaden their distribution and their revenue streams to across the whole globe effectively.
Looks like we have one additional question left, so if anyone has any more questions, please send them through now. The last question so far, guys, is what is driving BPO growth, and can that growth be sustained?
Well, we didn't cover it here in this presentation. Certainly BPO growth is expanding as a consequence of the fact that, one, if you're not leveraging and outsourcing traditional business processes and leveraging much lower cost solutions through the outsourcing process, you're behind your competitors. And you need to catch up, or else you're going to incur costs that are not equivalent, and subsequently you're going to have to charge higher prices, so you can't compete with your own products and services. You're in a dilemma. We're seeing this especially happen in the European theater, where many of the European firms are suddenly recognizing that they can't do everything themselves. They should outsource their business processes. We're seeing that there is interest in shared services in some cases within large companies, where just because you're in a different region, you shouldn't be handling everything yourself, but need to distribute and share that resource, and they turn to BPO providers for that. And the other half of the equation is, since we're looking at business processes, order entry, getting customers, those are all business processes that historically, to one degree or another, have been outsourced. Adding a whole layer of additional value to that process through analytics is really driving BPO demand as well. Coupling the two elements together so that you can maximize what's the information you're capturing on your existing clients, and then leverage that to expand your sales to those clients, bring new products to market if your clients are giving you some suggestions, listening to Twitter feeds and then applying analytics to that. All that works underneath the BPO umbrella, and therefore drives additional value, and then subsequently that you're delivering additional value by applying analytics and subsequently generating revenue from that.
Elitsa, Stephanie, do you guys want to add? Take that as a no. So with that, we don't have any other questions in queue, so I will take this time to wrap up the presentation. So thanks to Ramunas, Elitsa, and Stephanie, and thanks to everyone for joining us today and sending through your questions. As I mentioned, here are the social media links where you can follow both the analysts as well as TBR on Twitter, and join our conversations on SlideShare and YouTube to get access to our content. So we do encourage you to reach out and work with us. As you are leaving the webinar, there's a brief survey, getting some feedback from you guys on the value of the presentation, the quality of the presenters, and if there's any other topics or thoughts or comments that you'd like to share with us. We are using this feedback to improve and direct our webinars quarter to quarter. I know that there was some interest in outsourcing as a topic for next quarter, so if there's other topics that you guys in the audience are interested in us focusing on, please do send that through now. I'm going to leave the chat function open for another few minutes in case there's any last-minute follow-ups that you guys have or would like to set up conversations with any of the analysts about specific questions. And if we don't hear from you now, I'd like to encourage you to join us on November 20th for the Global Delivery Market Landscape webinar that the analysts have been referencing. It takes a deep dive into how services firms are growing out headcount across the globe. So thanks again, thanks again everyone for joining us today, and we look forward to your questions and speaking with you guys all soon. Thanks. Have a good afternoon.